and welcome to Wall Street Prep's Financial Planning and Analysis Modeling Certification course. My name is Chad Ettinger, and I started my career off in public accounting with PricewaterhouseCoopers, and then transitioned into FP&A roles, first at Facebook, and then most recently at Expedia, and in particular, a small brand within Expedia called Hotwire.com. I'm going to be your instructor throughout this course, and my objective is to prepare you for a career in FP&A. Right, so what exactly is FP&A? Well, FP&A stands for Financial Planning and Analysis. So let's unpack that for a bit. So as an FP&A professional, we're responsible for analyzing and overseeing all aspects of future financial reporting. Right? And to do this, we utilize both operational and the financial data to draw insights. Right? We analyze trends in the past, present, and the future data, and we use this to develop insights that are necessary to support the business. Right? And so while accountants, primarily describe the present reality of a company's finances, they're predominantly focused on accounting for, both past and, and kind of current financial information, right? But what does the past actually tell us about what to expect, next week, next month, or next quarter, right? How are changing business and economic realities that we're seeing in the market today, how is that going to affect our business over the next year or even the next 3 to 5 years, right? And that requires a very different set of skills and a different kind of viewpoint and mindset. And that's precisely where FP&A enters the picture. Right, and so FP&A, our responsibility is to take a step back from the details and to really understand the overall kind of bigger picture, right? And so how does that past and current financial information, what sort of clues does that provide about what might happen in the coming weeks and months, right? How could we expect, an increase in our revenues to affect our business, right? Is most of that going to drop to the bottom line? Are we going to be, still paying off fixed costs? What effect will this increase in revenue have on our headcount? Do we need to hire up new employees to be able to support that higher level of revenues? Or do we have a fairly scalable solution that, we'll be able to derive greater profitability from, right? What is this increase in revenue going to provide in terms of cash flows that we can use to, promote some new investment opportunities?